Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 14th. It is Pi Day, for whatever that is worth. It's a Thursday, and it was not a very exciting Thursday in the stock market. And good afternoon to you, Anita. Good to see you as always. Welcome, everybody. Those of you who were kicked out early yesterday, I apologize. I don't know what happened there. It said I was going, but where I look and see where you guys are chatting, it went weird. So so hopefully today goes smoother than yesterday. We were due for a technical difficulty, I imagine, but hopefully we got that out of our system for at least a week or two. So hi, Marie. Good to see you. Hope everybody had a great day in and out of the market. Very nice day, except for the weather, although it was a little bit warmer here in Utah today than it was yesterday. So I will take that as a win. It is still not spring as much as I want it to be, but we're maybe getting a little bit closer to it. Really just one of those days in the market. We continue to hover around resistance of the S&P 500. We held our own. We didn't move up. We didn't really move down. Very, very flat day from a broad market perspective. On the earnings front, we actually have for, I guess, March 14th, fairly busy evening with earnings. We have S&P 500 companies, Oracle, Adobe, Broadcom, and Ulta, as well as a couple of software companies like DocuSign and Pivotal Software, as well, set to report either tonight or before the open here tomorrow. So it'll be interesting to see. I didn't have a chance to dig into any of these earnings before I hopped on to the recap today. They weren't out yet, so we'll have to see where they take us going into tomorrow. Of course, Dollar General missed on the earnings, and whether it was a big miss or not, it definitely dropped today, no doubt about it. I mean, this pretty much sums up the day that was in the market. The 15-minute chart here, basically a lot of nothing. A little drift to the upside, little drift to the downside, holding above 28, but below 28.20, and not terribly surprising. We know that that's a resistance level that we've got to keep an eye on. We're going into Friday. It'll be interesting to see what happens. Ideally, we don't break tomorrow, but I'm not in charge of that, so we'll have to wait and see. And hey, Whitney, good to see you, my friend. As we look at it on a longer time frame on the daily chart, I mean, doji at resistance. That's the moral of today's story. Could be a place, with us going into Friday, the week coming to an end, nice profits to protect from a week of buying, that maybe we could at least consider locking in some of these, short-term bullish profits if we're trading things from a swing trading point of view, scale out, maybe hedge. I don't know. At resistance, definitely going into the weekend at resistance. Those things are always on my mind. Whatever I may decide to do, who knows? But I definitely will be thinking about them going into tomorrow. That's for sure. The NASDAQ, importantly, not much. I mean, a very flat day across the board, but probably most importantly was we were able to hold that break for a second day. So for at least one more day, the NASDAQ's proven that it can stay above 7,200. And well, if we can stay above 7,200, we've got some room to go. Not a lot of movement, though, in the NASDAQ either here today. The Dow, same type of a situation. We did technically close up in the Dow at 0.03%. So I guess we'll take it as a win, but it's not much of a win. Still below that 20-day moving average, still above the 9 EMA. I'm going to like it a lot better when and if we can push back through this 20-period moving average in both the Dow and the Russell Index. We'll have to see if maybe that can be the spark to get the S&P to want to try to break through. I don't think we're seeing sell signals, but I do think we're seeing a little bit more relative weakness in the Dow than we are, overall today. Just another doji, just like the S&P 500. Little more selling, though, in the Russell today. The only index where we actually had a red candlestick worth noting, at least at 0.4%. Closing below the 9, not a huge deal. That's a pretty flat moving average right now. Much like the Dow Jones, I'd like to see it get back above that 20-period moving average. Hi, Sandra. Good to see you. Before I get too excited, about it. And again, I mean, we're just, whether it's the short-term 20-day moving averages in the Dow and the Russell, or a major level of resistance at 2820 or thereabouts in the S&P. 3 of our 4 indexes are dealing with some resistance right now. We do have the NASDAQ that's been able to hold its break for now 2 days in a row, so a little bit of positivity there. We had opportunities to sell today at resistance. It's always reasonable to sell at resistance, right? So, we didn't sell off today at resistance when maybe we could have, and we definitely have profits from this week to protect. So I would imagine most traders are at least thinking about it, showing me a little bit of, willingness to see if this wants to break. That's that kind of what it feels like to me, at least. And hey, Zach, good to see you, my friend. So really just dull day in the overall market. Today, we did sell off of that 56 resistance, broke it on the intraday. This is why, at least for me, my rules are always a close is a close is a close. Been burned too many times on intraday breaks, and that's exactly what we got yesterday. Really never generated 1 ounce of momentum over in the material sector here today. Pretty red candle off of resistance. Really not a lot to see here, in my opinion. We've talked a lot about 56. It's definitely something that's worth respecting. I'm not going to really worry about it. I know where my support level is. I know that from a trend perspective, as long as we stay above this 54 support level, we are still holding that upward trend. I'm still overall interested in a break of 56, just not going to get it here today. So, and hey, Zach, how are you, buddy? So yeah, it's a little selling and a little more selling maybe in the materials than we saw across the board today. A little bit weaker today off of that resistance. Energy was an interesting one. We took a run at resistance, working up well above. Well, where do we get 66? 50 something or other. We were close to that 67 level of resistance, but we really kind of drifted down. We took the early run into that closer to resistance, and really drifted throughout much of the day. It's going to be a little tougher maybe to break that than maybe the bulls thought today. They were certainly quick to jump out. Nothing really has changed in my mind. 67 is still the number to be looking at as resistance, and a break of that is still very intriguing to me, at least. I think support is down here at now 63, with our swing and our 50-day moving average being tested here late last week. So a little bit of selling, not the most inspiring candlestick on the energy ETF right now. Nice little, really flat looking gravestone doji. But again, as it approached resistance with the market at resistance, makes sense. At least I think it's supposed to make sense that that's the way the price action went here today. We were showing good strength, and I think we've closed fairly strong, all things considered, in the financial sector here today. We did work into that 200-day moving average and kind of use that as our intraday high. We saw that act as resistance, even though maybe I wasn't expecting it to be a huge level of resistance a couple weeks back. I think we probably should respect that level of resistance. We are approaching, I've been keeping an eye on Bank of America from the scouting report 2 weeks ago now. I'm not sure options or stock for a break. So we're seeing some of these financial stocks knocking right on the door of that level of resistance. Haven't broken yet. A little bit of upward movement to maybe get us through that 200-day moving average could be a little bit of a spark. Of course, the 27, definitely going to want to look at it as well, because that is where our price action pushed us down. We have the 200 kind of hanging around right above us to maybe watch out for, but purely from a price perspective, we were up at 27 as resistance. Beyond that, not a lot until we challenge those highs that we're seeing things like the S&P and the material sector challenge right now. So still a little bit of room. I still overall like this, just a little bit cautious on it, and I still like breaks in this space a lot more than pullbacks or things that have started to move up a little bit off of recent pullbacks. I like breaks in the financial sector right now as the primary way that I'm at least looking at them. Industrials just kind of hanging in there, much like the Dow Jones. And we know how big of a deal that Boeing is to anything it's part of. But much like the Dow Jones, I almost want to see the industrial sector get back above that 20-period moving average before I get too excited about it. I'm not quite, I'm certainly not bearish on the industrial sector. I don't think you can make a good technical argument until, at the very least, we break this support level that we set up here on Monday from a overall, bearish perspective. But I'm not really loving the price action. It seems like Boeing's, is just kind of trickling down into some of the other areas. And maybe it's just a function of the market being at resistance. That could easily be a part of it, so maybe it's not as much to do with Boeing as it is to the market just kind of hanging out here at resistance. But I think I'll feel a lot better, much like the Dow, much like the Russell. These 20-day moving averages above me, they may not be a bad thing, but I think it's hard to call them a good thing. And so I'd like to see it get back above there. Of course, our primary resistance still is at 77. And if I had to bet on something, that's what I would bet on, that as long as the market breaks, we're able to test that. Luckily, I don't have to bet on that. And that will say probably true as long as this support level holds. But I'm definitely interested in seeing, if we get pushed down, if we need to take a test of that support before breaking out, if we're able to push through those averages. Just, the Boeing news really kind of just threw a little bit of cold water. The charts don't look bad, but they definitely don't look as strong as maybe they did a week ago on the initial pullback, to me at least. Tech, of course, closing above the breakout point, just like the NASDAQ here today, a little doji, but again, very importantly, from a technical perspective, holding that breakout point for at least a second day here now. I still really like this area. I'm really pulling for another day like this tomorrow. I really hope when we're having our talk tomorrow afternoon, it is just another boring day in the market. We're knocking on the door of resistance, because I think that could line up for some pretty interesting breakout candidates for early next week. Of course, with that said, it'll just break through tomorrow and throw some cold water on my plans there. So I guess I'll complain about that when it happens, right? Over in Staples, it just wasn't going to do it on its own. It's been kind of running with the market this week. I still am very, I just don't trust it, I guess is maybe a good way to put it. And I just don't trust the consumer staples sector as a whole right now. I will trust it a lot more once we close above 55, but until we do, and it just seems like I'm not alone. It was really easy. To me, it really feels like staples aren't going to be the stocks that push us through this resistance. And I might be dead wrong, but it really doesn't feel like that to me. If we see breakouts across the board in the market, I would expect that, there's a very good chance that the staple sector can break out alongside with it. But it seems like whereas tech might be the spark to get the market through, or, the material sector may be the spark to get the market through that resistance, I just have a hard time seeing the consumer staples being that spark right now. So looks like, at least for today, I wasn't alone. Nobody was going to let these guys lead the charge here today. Very, very flat, nothing really to see, just hanging out at that resistance level. Again, probably depending on how aggressive you individually are, you might call it a break. I would not go that far to say that personally. I think we're knocking on the door, but I don't think it's happened just yet. Over in utilities, a little bit of a doji forming here today on the utility sector. Pushed up, hit a new high on the ETF. I think there was another like 16 new 52-week highs in the utility sector here today. But we did sell off of those highs, putting in a nice little doji. Maybe, again, I wouldn't hold my breath, but maybe this can develop into a little bit of a bullish retracement opportunity. It continues to show great strength, right? And so I'm not going to assume it's going to start pulling back tomorrow. From a new entry perspective, that probably wouldn't break my heart. If I'm in utilities, I probably, don't hurt, no rush for a pullback, right? So no need to hurry on my account. Still above basically everything. Again, I've said it many times before, but if things are hitting new all-time highs, they're pretty bullish, and I don't think it takes a ton of analysis just to say, yeah, they are pretty bullish. Good afternoon, Patricia. Great to see you, and I hope you are doing well. Healthcare back and forth day, much like the overall market, still holding above this old breakout point, still below or breakdown point, still below, of course, that resistance level, pushed back above all of our moving averages yesterday. Again, this is, if we start to see some selling, I'm going to be looking into some of those healthcare plans and some of those stocks that are kind of testing those, or approaching lows, like MYL, for example. If once we do start seeing some selling, if that's what we get, but we are continuing to hold that breakout point. This is just continues to be a really interesting sector, and I think it really is just kind of puts a microscope on what kind of a market we're in right now. This is really a stock picker sector, in my opinion, and we're really in a stock pickers market right now, I believe, personally. And I think this continues to be the same way. From a support level, I think really the primary thing we're watching is holding that 91, and maybe this was just a failed breakdown. That happens, right, from time to time. So if we can hold this 91, no real reason that we can't work into that level of resistance in that 93 range, as long as we're not seeing steep selling in some of those weaker stocks or weaker industries within the sector. So 91 is support. Really the major support to be looking at, though, in my mind, is down here at about 89 at this swing down here. If that thing breaks, I think you have to put on the bearish goggles in the sector. We're a ways away from that happening, though, if it ever is going to. Right now, probably primary level of resistance to be keeping an eye on is up here. But we are going to have to deal with some resistance zones. Some of those downward trending healthcare stocks are now working into old support or into their falling moving averages. Some of those upward trends are approaching the recent swing high. So we are going to potentially be dealing with some resistance that could put a little bit of pressure on it if things aren't willing to fight through it. So continues to be one that I think you just want to be very careful, very open to both sides, but basically going with the flow. Not that I don't think you should always be going with the flow, but right now in healthcare, I think, hey, if it's performing well, I think it's fine to look to buy. If it's performing weak, I think it's fine to look to sell, but I'm not going to try to get cute or clever and try to pick tops or bottoms or anything along those lines. That's for sure. Over in discretionary, probably a good development with the price action here today. We did kind of get back above that 110 yesterday. We did close above it here today, kind of hanging right on top of our moving averages. We need to see a little flip. If you'll notice, the 9 EMA is below that 20 simple moving average. For those of you who may be new here, the 9 is the pink average and the 20 simple is the red average. We kind of need to see that flip-flop. We kind of need to see that 9 push back above that 20 to generate a little bit of momentum. That would be nice to see, a little bit of momentum generated into a test of that 112. Of course, you all know that 112 is really what I'm keeping an eye on, and I really think from a broad perspective is where we're going to be getting some of the better signals within the sector. We aren't there yet. We did hold 110. There isn't a lot, now we have yesterday's high, so we have a little bit of intraday resistance that we have to deal with, but not really a lot of major resistance into 112. But I do think we have to respect 112 as a pretty significant level of resistance at this point in time. Swing support nicely formed down here. And again, this week, if nothing else, I mean, it treated us from a bullish point of view very nicely so far. None of us are going to complain about that, but it also set up these swing lows off of that Friday low. And for so many of these charts, we now know where our trend line should be, right? And yeah, I'm with you, Zach. I like it a lot on the 112 break. That's how I like this ETF. I think there's room to run if we can do that within this sector personally. And I'm very interested in doing that as well. Wouldn't mind it taking a little bit of time. And again, it probably, may take some of the market moving along with it for this to actually happen. But I am with you. It is one of my favorite areas for either late next week or early the next week, at least theoretically. I really do like the break of 112 as a bullish signal within this sector. And good afternoon, Marcelo. Great to see you, my friend. Hope you are doing well here today. Hope you're doing as nicely as the real estate sector is. Just another day in the real estate sector. It's amazing how strong we have seen these utility stocks and these real estate stocks within overall some fairly bullish conditions, right? It's not like we've had to be super defensive throughout the course of this year in the stock market. Just another solid day, another all-time high. Nothing that we haven't seen many times over the course of this year. So So there you go. Well, hey, if we should all aspire to be doing as well as the real estate sector, and that means we're doing all right. So, would it be a bad thing to see a pullback? We are starting to pull away from our recent resistance level. We're starting to fly high above those moving averages, and so would a pullback be maybe okay or welcome? I think so. But I'm not going to be the guy that bets betting it's happening tomorrow by any stretch. Just another strong day over in the real estate sector. XLC kind of got some bad news. Well, bad news, and I kind of had a rough start to the day. You had Facebook gap down on the open. Not a catastrophic drop or anything like that, but definitely a drop. And we all know that Facebook, Google are both big parts of this ETF. Kind of broke through, working its way down. Still, I don't think you could make a strong case this is a bearish chart on Facebook. But I don't think anything I see here today says run off and buy Facebook tomorrow morning from a technical point of view. Nothing that I see would suggest that. So now we're going to have to kind of deal with that. Google, as we all know, of course, is fighting at that $1,200 mark. Did see a little bit of selling off of that resistance. That makes sense. That's normal. That's fairly predictable almost. Profit taking at resistance. And to its credit, we were able to hold above 47 today on that ETF amidst that selling that we saw in Facebook and in Google. I think you have to show that I think you have to give that a little bit of respect. That's not easy to do. I'm not on the Facebook train either, personally, Zach, and I'm really not generally. I mean, I like where Google's at. I don't necessarily know that I like a break of 112 as a new entry point for me, at least, but I would understand it. I'm not a huge fan of Facebook. Netflix has been just really weird at 360 in that 360 range. Had many times to break and just didn't want to. I still am skeptical of this sector as a whole. I'm still very skeptical of the video game stocks, whether they're in bullish or bearish setups. I always kind of try to veto them when any of the other coaches talk to me about them. And so sometimes I win, sometimes I lose. So I'm still overall fairly skeptical, but I do have to, give it respect that it deserves. Through all of that, we were able to hold that breakout point here today, putting a nice little doji. If this makes some upward movement tomorrow, that would make sense, from a technical point of view. With Facebook and Google not pulling the sector up, I just have a hard time, and it very well could just be me. This easily could just be a me thing. I just have a hard time trusting the sector. I'm not a huge fan of Facebook at this point in time, at least from a technical point of view. Google, I think, is interesting above 12. I am too. That's quite a bit of pressure. But yeah, Charter had a decent day. Charter was one of the stocks in there that had a decent day. But I just still like other areas better. But price action is always king, right? And regardless of what I think or don't think, holding that break is a pretty nice little signal. We don't have a lot of resistance until that 49 range. So this is one of those areas that if things start moving along, I could see there being, room to run, much like kind of the technology sector, in my head at least. I kind of see it in that spot. I just feel a lot better. I look at Intel and Intuit and those technology stocks, and their charts look so much more appealing. They seem so much better behaved than some of the components of this ETF. So I am there too, but I do respect the price, because you always respect the price, right? The price is always going to be smarter than me. There's no doubt about that. So it'll be interesting to see if Facebook isn't able to rally, if we're able to hold that 47. And it'll be interesting to see what happens if Google's able to break that 12, if this thing wants a little bit of room to run. So it's kind of an interesting spot right now. I don't think it's a great spot for a new trade tomorrow. In my head, it's not. But it isn't an interesting spot, I think, no doubt. Over in the volatility index, yeah, same as yesterday, right? Small doji at resistance. Probably should expect a small candlestick over in the volatility index, as nobody's freaking out, at least yet. Today was one of those days where dollar went up, metals went down. We did see the dollar kind of rally up. Now it's kind of got some things it's got to deal with, but it did, at least as potentially, I don't think it's confirmed it yet, but potentially if we see a little more upward movement, we'll have put in a new high, as maybe want to take another run at that 97, 60 or 65 or 70, probably number what depends on what number you're calling it. I don't think it's confirmed yet, but I do think you have to respect the price movement here today, pushing back into those shorter term averages, closing above the 20, using the 9 as its support level. But right now we still do have the 9 rising above the 20, even amidst all of the selling that we saw leading into today. So I wouldn't be terribly surprised if we do see a little bit of upward movement. I would understand if someone was looking at this as a pullback, higher highs, higher lows. Don't think you could make an argument that it's confirmed yet, at least not if you use my trading rules, you couldn't. But I can see how it can start to be looking that way. Keep an eye on these new lows that we've kind of established. If those falter, beyond that 50, there's really not much until we get back into that 96 range. So this will be an interesting one to see tomorrow. I don't think that there's a great setup in here today, but we did see a little bit of maybe, potentially the start of that shift from the pullback into the buy zone. We will have to see. Obviously, we all know what level of resistance we're dealing with in that 97.60 to 90.70 range. That is a big deal. I still overall am neutral. I don't really care all that much what it does or doesn't do tomorrow, to be quite honest with you, because I'm waiting for it to come out of this range one way or the other. But interesting price action here today. If that carries into tomorrow, I could definitely see the argument for the bull pullback over there. Over in our metals, gold went from breaking above 13 and above the 50-day moving average yesterday to breaking back below both of them here today. On a positive note, if you look at this from a bullish point of view, I think this is an interesting development. From a bullish point of view, now we know where resistance is, right? So if we're thinking about, well, I want a new buy within gold, it does. That's a nice looking candle. If we get a little confirmation tomorrow, that's an interesting looking chart for sure, Zach. I would agree on the dollar. We have established some resistance. It's also lining up with that 20 there. If we catch a support level, if we create a higher low somewhere in here and take another run and break back above that, I think that can be a little bit of a sign that there's a shift in momentum. So we always need resistance. At least I always need resistance. I always want to see that test. Make a higher low, break that resistance, then it'll look like that upward trend, right? On the other side of things, if we do work down and break that 1280, we will have technically put in lower swing highs and, of course, by virtue of breaking 1280, lower swing lows. Obviously, neither of those things have happened yet, but I do think it makes it a little easier to kind of say I should be not bullish at all if it breaks 1280, and I should not be bearish if it breaks above this 312 or so resistance that we've now established. I think those now become the areas I think we can now kind of take away that nice round 13 number that had been what a lot of us at least had primarily been looking at as kind of the support line in the sand, so to speak. With the price action that we saw here today, I feel comfortable saying, yeah, this is resistance. 13 is no longer going to scare me. I'm no longer going to treat 13 like it's, super important. Do I think it's all of a sudden worthless? No, but I think this swing high is going to be more information from a price perspective right now. So, yeah, I think right now the best play on the metals is either cash flow or sitting it out. We're seeing some conflicting signals. If you made me do something, I probably would still go bullish on it, but luckily you won't make me do anything. So I think from a cash flow point of view, it still makes some sense. From a more directional point of view, I would definitely say let's let it kind of shake out a little bit, especially when we look at all of that weakness in silver. They don't have to run together, but it sure is a lot easier when they're not, when they are, right? So we, of course, ran right into that 1550 yesterday. We saw that gravestone doji, and goodness gracious, was it ever a gravestone in hindsight. Saw some downward movement early and really just sold, breaking right back down into that 200 period moving average. That's quite a bit of selling. You have to worry about that being a kiss goodbye. Whereas this one I could, and we talked about a little bit yesterday, this one I think you could make a much easier case on the bear side than the gold to me. The gold below 1280, I think that's a different topic altogether. But with where it is right now, I am looking at gold more neutral or cash flow friendly than anything else. Over on silver, well, now we've got to get above 1550 before I can even think about it from a bullish point of view. We are hanging on by a thread at that 200-day moving average. 15 is a big number, old support, old resistance, recent bounce off of that. 15 not holding would be a pretty bearish signal, in my opinion. Not to say that it will happen. Maybe we'll create a higher low and then take another run. And again, that would be okay. If we do establish, say, a doji tomorrow into some upward movement next week and then a break, that could be a decent looking tradable signal. But as we stand today, well, that isn't happening tomorrow. So very bearish looking here today. 15 is our primary support level, in my opinion, and that will probably remain true until it's either well above it or has given way. I think that is a very big deal. We've just seen a ton of price history at that marker. So a lot of selling over there today in the metals market. Silver, gold not doing all that great. Silver's chart is just really not pretty from a bullish point of view. It is just, whether it's lower highs, now, I mean, someone out there is going to argue that we've now made lower highs, and who am I to say they're wrong, right? We've made lower lows. I mean, it's not a very bullish chart, in my opinion, at least. It's bulls. Yeah, I'm going to wait till it breaks above this resistance. No matter how long that takes is probably the trade I want on it from a bullish point of view, but we'll have to see. So yeah, exactly. Work back down, break 15 and work back to $14. I'm all right with that. I am all right with that. If that's the way you want to go, silver, I will be cool. I'll be cool with that. Over in our old friends in natural gas, it looks like, barring something crazy happening tomorrow, we're going to end the week in our trading range. We're now going into several weeks within this trading range. We've talked a lot about it. Whenever we develop a range like this, I will always maintain that whichever side breaks is a signal and potentially a tradable signal. Within this particular context, I would not feel comfortable from the bearish point of view, simply because of the swing support and then that 250 support that would be just there to prop it up. I wouldn't buy it if it broke that support by any stretch of the imagination, but I wouldn't feel there was enough room to maneuver from at least a swing trading perspective. Could open up the door for interesting, intraday plays if we break. I think the break to the upside is much more interesting personally. I know that not everyone agrees with that, and I certainly understand that side of it. That would be an early signal, but from a pure price perspective, we would have created that higher low, created higher highs. In this case, with the way it's developed over the over the several weeks, breaking out of that now breaks us back above the 50-day moving average as well, which may or may not help, but it won't hurt, right? So it's been a little more normal, Zach. Yeah, this is definitely a little out of character. I mean, natty gas can get crazy. This isn't the only time you'll see it go all sorts of nuts by any means. But a lot of times, yeah, we're dealing with much more well-behaved or smaller type of candlestick. So yes, I would say that throughout much of this year, we are behaving a lot more normal in natural gas than we were, late last year. This is more what I would expect it to behave like. But yeah, every now and then, this won't be the last time. It might be, I mean, this was extremely huge. This is kind of more normal insane, if you will, in natural gas, in my opinion. But it is always, it can always do that stuff. But a lot of times it is just kind of a little more laid back. Much like Coach Matt, I really like the UNG as a cash flow type of a tool, the ETF that tracks natural gas. Personally, from a swing trading perspective, I've never been comfortable with swing trading futures contracts. I think they're great for intraday plays, but I don't really like. I'm too wimpy. You guys know I'm the opposite of brave. So I like UNG if I'm swing trading, or the ETFs in general. If I'm swing trading these commodities, I just generally a little more comfortable for me. I don't know, Marcelo. I mean, I think you could make an argument, especially with the 250 being such a strong level of support. I think you could make an argument on that side of things. I wouldn't look at it as a iron condor situation just over the last couple of weeks within this range. Personally, that's not enough time to feel comfortable that wouldn't come out. And again, natty gas can move. If we're together on Monday and we see something like this happen or something like this happen, it really wouldn't be all that shocking. It can really have huge gaps over the weekend as it's opening up going into next week. Generally, I would not like it. I'd want to be really wide. I think probably for me, at least, a break of this, resistance theoretically would lean me more towards wanting to maybe do some cash flow to the bull put side of things versus trying to lock it in a range. While I wasn't doing anything in hindsight, if I was, it probably would have been bear calls during this downward move. Generally, I don't think that, and again, this is my opinion, and it's obviously I'm not always right, but I don't really like the energy stocks as a general rule for condors, because they can really get moving and shaken kind of out of nowhere, if you will. So for me, I would say no. Again, that doesn't make me right. Sometimes I look like a genius. Sometimes I look like a fool, right? That's the nature of it. You talk trading long enough, sometimes people are, wow, that guy knows what he's talking about. And other times they're like, wow, why did I just waste my time? But I think right now, I think we're still on the wait and see. Wait to see if it breaks. Either way, I think is a signal to that side. I think it's just the real debate is, do we call it a tradable signal? And that's going to be up to, of course, each of us to decide on our own. But I definitely will be interested if we do break. Yeah, generally I would agree with that, Zach. Mostly sticking to the indexes. I mean, there will be times where a stock will go into a nice long trading range, but as a general rule, my general approach is usually there's a better side when we're talking individual stocks or commodities. Usually I think there's a better side of the credit spread than the condor, at least upon entry of the trade, right? We break to the upside. I think in theory, that would be an opportunity to make work into the bull put side of a theoretical iron condor. Then we run back up into 325, see some resistance, then maybe scaling into the bear call side. I mean, that might make sense. But as far as setting them up at the same time, generally, I feel like stocks and ETFs and commodities in general, I feel like there's usually a better side. And it doesn't, again, not always right, obviously, but that's usually the approach that I take to it. And lastly, over in crude, we were able to just kind of carry on. Nothing crazy after breaking through that 58 here yesterday, but higher high, higher low. We're able to close in the green. Not a ton of significant resistance until probably we work in to that 200 period moving average, or that general ballpark. Excuse me, maybe a little bit lower than that, but not a lot of overhead. I think it's a pretty bullish looking chart right now. Whether you are bullish or not, that's your business. But I really have a hard time thinking bearish on this. We're above everything. We don't have a lot of resistance above us. We've got a rising 9, above a rising 20, above a rising 50. Not a lot of resistance in the short term. So should be interesting to see if crude's able to carry this run, whether it's, immediately, kind of blowing through like sometimes crude can do. It broke resistance and just kind of shot up the charts to the next level, or a little bit of sideways choppiness before we do that. But right now, if nothing else, I think we now know that this should be support. We shouldn't break this support zone. That would probably be the sell. Below 55 has not changed. Maybe even more confirmed after, if we were to fail this break and break through that. Right now, 58 probably is the primary support, but even a little bit of a deeper pullback. This isn't like a long developing, sideways, breakout. It took a few weeks, and for crude, that sometimes feels like a long time. But really, if we were to say pull back into that rising 20-day moving average and see some bullish signals, I would say, yeah, that'd be an interesting pullback opportunity. Right now, primary support, I would look at it at $58. So yeah. I mean, what I hope for is just another small body candle like today, just closing above 38, 38. Yeah, wishful thinking. 58. Closing above it, up a little, down a little bit, then work into next week. I'm not a huge fan, and it probably is more mental than anything else. I understand that, but I'm not a huge fan of new trades on Friday. In my head, new trades on Fridays are hedges, or selling a call against a long call or something like that. So we'll see where this one goes. But I do think you have to call it a bullish signal, closing above that 58 for a second day, rising moving averages. Things are looking fairly strong from a technical point of view, I think, over in crude. So, ladies and gentlemen, that is going to do it for the market recap today. We made it all the way to the end without kicking you out. So, that's a step in the right direction. So I don't know what the heck happened yesterday, but I'm not going to pretend to try to figure it out, because I'll never figure it out. But as always, ladies and gentlemen, thank you for joining me. It's always my pleasure. Appreciate everybody's time. It's always a lot more fun to do this with you guys than do it on my own. So thanks for joining me. If you are new around here, be sure to subscribe to the channel and hit that notification bell, and join us over at Tackle Trading on Twitter as well. You can also, of course, find me at FrankMartin23 on Twitter. If you're ever looking for me, I'm never too far away. So don't be afraid to say hello if you want to. So if you enjoy the market recap, it's always helpful and appreciated if you do give it a thumbs up, just to let us know that it is helping you out. Let YouTube know that we're on the right track over here as well. We've got some cash flow club going on this evening for our pro members. So those of you who are pro members, enjoy the cash flow club. Always a lot of fun in there. We all love cash flow. Nobody ever says I don't like cash flow, right? Some people prefer directional trading, but no one says, no, I don't like cash flow. So if you're not a pro member, why don't you head on over to Tackle Trading? We'll get you set up with a 15-day free trial. You can check it out, see what we're all about, see if maybe a place that you might want to hang around a little bit. So thank you all so much for your time this afternoon. You guys have a wonderful Thursday evening. Enjoy the Cash Flow Club. We'll see you same time and channel here tomorrow. Thanks, everybody.